Hi, and welcome to this week's Stockscores Market Minutes. This week, I'm going to talk about the day trading strategy cycle, the different strategies that you can use at different times of the day, and I'll emphasize a very important concept that every day trader and swing trader should think about. Plus, I'll do my regular market analysis. We'll look at the stock, commodity, currency markets, take a look at where interest rates are likely to go. And then finally, the day trade of the week on AMAM. That's all coming up. All right, so what is the day trading strategy cycle? Well, the first thing that we need to understand is a very important concept that will dramatically improve your day in swing trading, and that is this. You want to focus on alpha stocks. Alpha stocks are those stocks that are trading with very abnormal volume and strong liquidity. When I first started trading, I would trade the same small group of stocks every day. The problem was most stocks, most of the time, are not worth trading because most stocks, most of the time, move with how the market moves. We want to find stocks that are trading on their own story, that are coming alive because they've got something going on. And then we take those companies and look for entry points based on the chart that we're analyzing. So I typically, when I'm day trading, will look at a 1 or 2 minute chart, but also paying attention to time frame confirmation on the 13-minute chart and daily chart. What I'm looking for, first of all, is the stock abnormal? And then what are the entry points along the way using different concepts? The most important thing that we want to keep in mind is that we don't want to be a buyer of stocks that are normal. We want to be a buyer of stocks that are capturing the crowd, but we also want to be one step ahead of the crowd. You don't want to chase stocks as they rip higher because retail traders are chasing them. We want to be there right when they start to turn. So let me show you some examples that'll emphasize this. So the first example here is Rent, R-E-N-T. And this is a stock that came alive on Thursday last week. But what I want you to notice, this is a 13-minute chart. And leading into Thursday, nobody cared about the company. You can see it was trading very boring, very normal. Then it comes alive right there. Now, this is a 13-minute chart. So this opening 13-minute bar has very abnormal volume and abnormal price behavior. And it surprises the market. That's a critical thing. There's a surprise here. Wednesday, it's boring, trading around $1.30 a share. And then on Thursday, it gaps up and comes alive. So that first bar is a strategy I use for swing trading called a Stockscores simple swing. I'm looking for this 13-minute action candle, and you can see a little pink dot right there. That's my own indicator. So that pink dot is telling me that this stock is coming alive, that there's abnormal behavior. You can see it, but what we do is have the computer look for it because there's so many stocks out there. How can we possibly find these in a timely fashion? Well, these indicators help me do that. I've got my computers tracking every stock that trades in the US. I wish we could do it on Canada as well, but the Canadian market is not covered by TradeStation. And so I'm focused on those very liquid, tend to be lower price stocks that come alive with abnormal activity. So that first entry point is using a strategy I have called the Stockscores simple swing. It looks for a 13-minute action candle breaking from low volatility. Now we can also then use that concept for day trading. So here's our day trading chart. This is a 1-minute chart. You can see it's trading very abnormal volume on Thursday compared to Wednesday. There's the price gap that started the day. And the first entry on the opening 2-minute bar is something, a strategy I use called a day trader strategy. Now, I'm not using this strategy a lot right now. This strategy tends to work better when the market is in an upward trend. And so it really has to be a high quality setup for me to like that particular strategy. However, it gave us a signal on that strategy in the opening 2 minutes. What I prefer to do right now is wait for breaks of pullbacks because I don't want to be part of the crowd. I want to be leading the crowd. And so you get this initial run up and then you get a pullback and you get the break of the pullback right there. That's my hit and run strategy. We call it an HNR. Every day we are following indicators in my live trading webinar, which is available from stockscores.com. It's called Active Live. You can learn more about that at my website, stockscores.com. So the hit and run signal looks for the break of the first pullback. A more relaxed version of the same concept is to look for a pullback that breaks a 2 inflection point downward trend line. And you can see there's a pink dot right there breaking this pullback. So that's my indicator firing. It's that first signal. That would be the IPB, the intraday pullback strategy. Then we can look for the third strategy, which is a superhero. And a superhero, you're looking for a longer pattern to build. There's an ascending triangle and a break from an ascending triangle. So that would be the superhero strategy. Now, when do you sell these things? Well, once they're into their upward trend, you can very simply look for a break of the upward trend line. What you don't want to do is be a buyer of the stock when price runs up and away from the trend line, because it's very likely that it will pull back. And that's the idea behind the pullback play. Price runs away from the trend line, it pulls back, you buy it when it bounces off of the trend line. It runs away, now it breaks the trend line, so now the party's over. For me to now consider this stock again, I need it to break a pullback, but I want it to be from a rising bottom. See how this bottom here isn't higher than the previous? Whereas this one is higher, and so now that makes sense to make another entry there. So that would be another pullback play strategy. All right, so that's how they all work together. There's a lot more to it than just that. And those things are obviously part of what I teach at my website in the Active Trader course. But just wanted to give everyone sort of a general idea of the different phases that happen through the day. You don't want to be a buyer when price runs away from the trend line. You want to buy breaks from good chart patterns, either pullbacks or ascending triangles or rectangle consolidations, head and shoulder patterns. Those are all important. But the critical thing, and I'll re-emphasize this, is that it has to be a stock trading with abnormal volume, abnormal liquidity. That's where the party is. And of course, we build these lists every morning. Every day, there's probably 10, at least 10 stocks that are like this. And then of those 10, in a weak market, you get 1 or 2, maybe 3 good ones in a day. In a strong market, you can get 10 in a day. Really depends on market conditions. All right, so let's get into this week's market analysis. Jump over to the Stockscores website here. And here is the chart of the S&P 500. And you can see that we are breaking down a little bit. We have this support right here. This is the short-term chart. Let me draw that in blue. It'll make it easier to see. So we've got falling tops, which is negative, and you're testing support. And so we hasn't happened yet, but we could see a breakdown through support this week. We've got the consumer price index number on Tuesday. We've got a Fed decision on interest rates on Wednesday. Those are market moving events that could either cause the market to bounce off if the news is better than expected, or break down through support if the news is not what the market likes. So a little bit of a negative to neutral chart on the short term. On the long term, you can see that price has rallied up to the trend line of resistance. And every time that's happened, we've rolled over and gone lower. Is that going to happen again? Well, one thing is that the downward momentum is slowing a little bit. And so I do think there's a decent chance we'll get a little bit of a pullback, but I'm not so sure we're going to go to new lows. It's possible, of course. We'll have to keep an eye on whether we go to new lows or do we build a rising bottom and then break that downward trend line. Of course, the latter would be a good thing for stocks for 2023. All right, let's take a look at the Canadian market. T.XIU is the symbol. And we'll look at the 1-month chart first. And there you can see a very similar chart to the S&P. You had the sell-off. Things were looking really good last week. We had this rising bottoms, and then we broke down, and now we are testing support here. If we break down through this floor, then we may see the next wave of downward move. So I suggest some caution with the Canadian market as well as the US market. And you can see there on the 3-year weekly chart, the long-term upward trend line was broken. And we're really just trying to battle. And who's going to win the battle? Are we going to build a head and shoulders bottom and move up? Or are we going to roll over and go down through support? In the long-term sense, I still think the market has decent potential in the weeks and months ahead. But looking into next week, it's hard to say. There's a lot of things that can be really moving the market. Again, that CPI number, the Fed decision on Wednesday, and then we go into kind of the holiday slowdown. So um, a good deal of caution is warranted early next week as we look for what happens next. All right, let's take a look at the we'll take a look at the commodity markets. Gold first, GLD, and there you can see let's do the short-term chart first, 1 month. Generally an upward trend in gold in the 1 month time frame. On the 3-year time frame, we've broken the downward trend line, and now we're breaking up from a rising bottom. So that's a bullish signal. You can see the stock scores are pretty good, and that's a sign that the market is likely to go higher for gold. Well, how about oil? Let's take a look at USO. And here you can see USO, which is the oil ETF, really broke down this past week. If you look at the 3-year chart, you can see it's breaking down through support. First of all, there's your upward trend line, and you're starting to move down through that, and you're testing this little floor right here. So the oil market is at a really critical place. You can see the stock scores are pretty weak. Anything under 40 is fairly weak, and we're testing some support. I think we could see a breakdown in the near term. So a good deal of caution warranted with oil and gas stocks. If that breakdown happens, and that could happen next week certainly, you might want to think about selling some of those positions as the individual stocks break down as well. If you look at the short-term chart, you can see that selling pressure into the end of the week or into last week, still in a downward trend. So be cautious with energy here. All right, how about the US dollar, UUP? And you can see it's generally been drifting lower the last couple of months, and that is one of the things that has been supportive for gold. How about Bitcoin? GBTC is the ETF that I like to look at, and there you can see falling tops on the chart. That's a sign that the sellers are in control, and it's a good reason to stay clear of Bitcoin, and I would say crypto in general. The final chart I'm going to look at is TBT, which is our proxy for interest rates. This is an inverse of the US Treasury bond market, and you can see that we've been falling for the last 6 weeks. Had a little jump there at the end of the week last. We haven't broken the short-term downward trend yet, but that may be people starting to position themselves ahead of that CPI number, ahead of that decision on US interest rates. If we look at the 3-year chart, you can see that the long-term trend line is right there, and we've basically come back to it. I've been talking about this for the last few weeks. It's now likely that we see interest rates bounce back a little bit and maybe stabilize. Perhaps they're not going to go up a lot, but they've probably stopped the pullback that they've been in for the last few weeks. All right, so finally, let's get our ratings then. US stocks neutral on both time frames, the same for Canadian stocks. Gold bullish on both time frames. Oil, I've gone bearish on both time frames now. I want to be cautious going into next week. Maybe we will bounce and we'll be able to pull that one out of the fire, but right now it's looking a little bit weak. US dollar neutral in the long term, bearish in the short term. Bitcoin bearish in both time frames, and interest rates long term neutral. We are at that trend line where it should bounce, but still short term bearish. That meaning interest rates driven by the bond market have pulled back. All right, let's look at our day trade of the week. And again, let's emphasize what we talked about at the top of the video. You can see the abnormal volume here on AMAM. That tells us it's a stock that's in play. We had the opening gap, which was fairly large. Here's our hit and run signal. I wasn't loving that just because of the gap, but it ended up ripping dramatically higher. You can see all these price gaps along the way. That's because the stock kept getting halted. So it was a bit of a tricky stock to trade early. I think the better trade of the day was on what I call a superhero setup. This is the build of a rising bottom. You could call this a head and shoulders bottom even. And there's your action candle breaking through resistance from optimism on a stock that's abnormal. And that led to a nice run into the close, moving from $3 to $4.50 in just a couple of hours. That's a 50% run on a stock that we pick using that basic idea. Start with abnormal activity and then apply some simple strategies to identify the right places to buy and sell. Well, I hope that you've enjoyed this week's Market Minutes. If so, click on the like button, leave a comment. Do you think the Fed is going to raise rates more than expected this week? Will the market jump or fall on Wednesday when the Fed announces? I'd love to hear your opinion on that. And most importantly, as you go into next week, make sure that you trade well.